Banks will never tell you this, but there's a loophole in their system that could save you thousands of dollars every single year. While most people are quietly losing money through hidden fees, interest charges, and account tricks, a few smart ones are flipping the script and making the bank work for them. And here's the shocking truth. There are not one, not two, but three powerful loopholes hidden inside the banking system that could put thousands of dollars back in your pocket, if you know how to use them. Most people never hear about these strategies because banks bury them in fine print or simply hope you'll never ask. Think about this. The average American pays over $350 a year in bank fees alone. That's money you'll never see again. Money that could have gone into your savings, your investments, or even your grocery bill. Imagine this. If you're 30 years old and you lose $350 every year for the next 20 years, that's $7,000 gone. And that's before interest, before compounding, before inflation. Now ask yourself, how much have you unknowingly handed to your bank in just the last 12 months? Stick with me until the very end, because secret number 3 is so effective that banks literally count on you staying silent about it. It's the one trick they hope you never learn. And once you do, you'll never look at your account the same way again. Here's what you need to know. Banks aren't built to make you rich. They're built to make themselves rich. Every overdraft fee, every monthly maintenance charge, every late payment, it's not random. It's calculated. It's part of a system designed to quietly drain your money a few dollars at a time, until one day you wake up and realize you've lost thousands. Take James, for example. He was a delivery driver who worked 50 hours a week. Every month, he'd get hit with a $35 overdraft fee because his paycheck timing didn't line up with his bills. $35 might not sound like much until you realize it happened 9 times a year. That's over $300 gone just for being unlucky with timing. Or Maria, a single mom who thought her free checking account was actually free until she read the fine print. If her balance dropped below $1,000, she'd get charged $15 a month. In a year, that was $180, and she had no idea. And then there's inflation, the invisible thief. You think your money is safe in a savings account, but with most banks paying 0.01% interest, your cash is actually shrinking. Inflation averages 3%, meaning every $100 you leave sitting is worth $97 next year. The bank lends it out, invests it, and grows it while you get nothing. Most people shrug and accept this. They think it's just the way things are. But that's the lie, because once you understand the system, you realize there are loopholes, perfectly legal ones, that flip the advantage back to you. And that's exactly what we're going to uncover next. Most people think all savings accounts are the same. You put your money in, you let it sit, and it grows a little over time, right? Wrong. That's exactly what banks want you to believe. Here's the shocking truth. The average savings account in America pays 0.01% interest. That means if you have $10,000 sitting in the bank, you earn $1 for the entire year. $1. Meanwhile, inflation is eating away at your money at 3% or more every year. So in reality, your money isn't growing at all. It's shrinking. But here's the loophole. Some online banks and credit unions offer high-yield savings accounts that pay 10 to 20 times more than the traditional banks. The difference might not seem like much at first glance, but over time, it's massive. Step 1. Stop letting your money die in a big bank. Traditional banks like the Big Four spend billions on buildings, marketing, and bonuses. How do they pay for it? With your low interest. Step 2. Find a legitimate high-yield savings account. Online banks don't have the same overhead. They pass the savings back to you in the form of higher interest. Some accounts pay 4% to 5% APY right now. Step 3. Calculate the difference. Let's compare. $10,000 in a traditional bank, $1 per year. $10,000 in a high-yield account, $500 per year. That's a $499 difference for doing nothing differently, just moving your money. Step 4. Stack it with automation. Set up automatic transfers from your paycheck into your high-yield account. Over time, it compounds. Take Anthony, a nurse from Ohio. He kept $15,000 in a standard bank account for years, earning basically nothing. One day, His friend told him about high-yield savings. He switched, and within a year, he earned over $700 in interest. That's nearly a month's worth of groceries for free, just by moving money from one account to another. Now imagine what happens over 5 years. That's thousands of dollars saved. Money most people simply hand back to the bank without realizing. And here's the kicker. Banks know this. That's why they don't advertise their low interest rates in bold letters. Instead, they distract you with slogans like, "We value your trust," while quietly keeping your money stagnant. But interest rates are just the beginning. Because when it comes to borrowing money, banks play an even bigger game. One that could either cost you thousands or save you thousands if you know how to flip the rules. That brings us to secret number 2. Here's what banks don't want you to know. Credit cards aren't just a trap. They're also a tool. Used carelessly, they'll bury you in debt. But used strategically, they let you borrow money for free and even get paid to do it. Step-by-step breakdown. Step 1. Understand the grace period. Most credit cards give you about 21 to 30 days after your statement closes before they charge interest. That means if you pay your balance in full before the due date, you're essentially borrowing the bank's money for free. Step 2. Align your spending. Let's say your statement closes on the 10th. If you make a purchase on the 11th, you don't have to pay it back until the next cycle, almost 50 days later. That's nearly 2 months of holding onto your cash. Step 3. Put your money to work. Instead of handing money to the bank immediately, you leave it in a high-yield savings account or short-term investment. Your cash earns interest while the bank waits. Step 4. Pay in full always. This only works if you never carry a balance. Miss the deadline, and the bank flips the script back on you, slamming you with 20% interest. Take Melissa, a school counselor from Texas. She used to pay off her card the moment she swiped it, thinking it was the responsible thing to do. Then she learned the grace period hack. She shifted her payments to just before the due date, leaving her money in a 4% high-yield account in the meantime. Over a year, this simple timing change earned her an extra $400 without changing her spending habits at all. Now multiply that by 5 years. That's $2,000 saved just by knowing the rules banks never bother to explain. But here's the trap most people fall into. The banks want you to slip up. They flood you with offers, minimum payment reminders, and flashy rewards, so you'll spend more and miss the fine print. One late payment, and the grace period disappears. Suddenly, you're paying 20% interest on everything. That's the real game. Banks profit when you don't know the rules. So here's the question. If banks know you could beat them at their own game, why don't they stop you? Because they've built in something even more powerful. Hidden fees that most people never question. And that's where the third loophole comes in. It's a trick so effective that a single phone call could erase hundreds of dollars from your account instantly. And yet, most people never use it. That's secret number 3. Here's another dirty little secret banks hope you never find out. Many of those painful overdraft fees, late fees, and monthly charges can be erased with one phone call. Yes, you heard that right. One call. A recent survey found that 44% of people who asked their bank for a fee reversal actually got it. That means nearly half of all customers who speak up walk away with money back in their pocket. But here's the shocking twist. Less than 15% of people ever ask, which means banks pocket billions every year. Not because you owe it, but because you didn't know you could fight it. Jason, a college student in California, got hit with a $35 overdraft fee after his rent check cleared one day before his paycheck arrived. He was furious, but decided to try something new. He called his bank. He explained the situation politely, mentioned he had been a loyal customer for 3 years, and asked if the fee could be removed. The rep put him on hold. 2 minutes later, the fee was gone. $35 saved. One phone call. Karen, a single mom, discovered she'd been paying a maintenance fee of $15 a month for a year. That was $180 gone before she even noticed. When she called her bank, she simply asked, "Can you waive these charges going forward? I wasn't aware of them." Not only did the rep stop the fees, but they also credited her 3 months back. $45 back instantly. Step by step on how to do it yourself. Check your statements. Look for fees labeled overdraft, maintenance, late payment, or NSF. Pick up the phone. Don't email. Don't text. Call. Human to human works best. Use the right script. Be polite. Say you didn't realize the fee was there. Mention your loyalty. Example, I've been a customer for 5 years, and this is the first time I've seen this. Could you waive the fee for me? Be persistent. If the first rep says no, ask for a supervisor. Lock in the win. Once reversed, set up alerts or switch accounts to avoid the same trap. Think about this. How many $35 fees have you paid in your life? 5, 10, 20? Even if it's just 10, that's $350 you could have saved with less than 30 minutes of phone calls. Now imagine millions of people across the country all paying those same fees and never asking for them back. That's why banks will never advertise this loophole. It's too profitable to keep you quiet. And here's the part that should really scare you. Fees are just the beginning. Because once you realize you can erase those charges, you'll start to wonder, what else are banks hiding in plain sight? That's where the real game begins. And the answer might just change how you think about every dollar in your account. Let's pause for a second and recap what we've uncovered so far. We started with secret number 1, high-yield savings accounts. Most people leave their money in accounts that earn pennies, while inflation quietly eats away at their balance. But by moving that money into a high-yield account, you flip the script. Remember Anthony, the nurse from Ohio? He earned $700 in 1 year without lifting a finger, money his bank would have otherwise pocketed. Then came secret number 2, the grace period loophole. Instead of being buried by interest rates, you borrow the bank's money for free, up to 50 days, as long as you pay in full. That's what Melissa did, and over 5 years, her timing hack earned her more than $2,000 in free cash flow. And finally, secret number 3, the fee reversal hack. The one banks fear the most. One phone call, one polite request, and fees vanish. Like Jason, the college student who got $35 back in minutes. Or Karen, who clawed back $180 just by asking the right way. Now here's the part where most people slip. They think, that's nice, but I'll do it later. And later becomes never. So here's a simple framework you can apply right now. Audit. Go through your last 3 months of bank statements. Circle every fee. Shift. Move your emergency savings into a high-yield account today. It takes 15 minutes online. Leverage. Use your credit card smartly. Align purchases right after your statement closes, then pay in full. Ask, pick up the phone, and call about those fees. You'll be surprised how often you win. Picture this. You save $500 a year by switching accounts. You save another $400 by using the grace period correctly. You claw back $200 in reversed fees. That's $1,100 saved in just 12 months. Money most people throw away. Now compound that over 10 years. That's $11,000 back in your pocket. Money for a down payment. Money for an investment. Money that builds your future instead of padding your bank's profits. But here's the real lesson. If these 3 loopholes are hiding in plain sight, imagine what else is buried deeper in the system. Because banks aren't the only ones with tricks. The wealthy, the people who truly understand money, play an entirely different game. And in a moment, I'll show you how they use completely legal strategies to hide, grow, and protect their money in ways the average person never sees. We've already uncovered 3 powerful bank loopholes, but here's the truth. The financial system is full of hidden traps and overlooked opportunities. The more you know, the more money you keep. Let's go deeper. Banks love certificates of deposit because they lock up your money. But smart savers flip it into a strategy called CD laddering. Instead of putting all your savings into one long-term CD, you spread it across several with different maturity dates. 6 months, 12 months, 24 months. This way, part of your money is always accessible, while the rest earns higher interest. It's a loophole that gives you flexibility and better returns. Frank, a retired mechanic, built a CD ladder with just $5,000. Instead of earning 0.5% in a normal savings account, his ladder brought him nearly 3%. Over 5 years, that extra difference covered 2 months of his rent. Hidden trap 1, free checking accounts. Banks advertise no-fee checking. Sounds safe, right? But here's the catch. The account is only free if you meet conditions, like keeping a $1,500 balance or setting up direct deposit. Miss one, and boom, a $15 monthly charge hits you. That's $180 a year for something you thought was free. Lisa opened a student account that was free until she turned 25. She didn't notice the switch, and for 8 months, $12 fees drained her balance. Nearly $100 gone before she caught it. Bonus loophole, overdraft protection flip. Most people think overdraft protection is a safety net. In reality, it's often a trap, one that costs billions in fees every year. But here's the loophole. Some credit unions allow you to link your savings or even a low-interest line of credit instead of paying overdraft fees. That means instead of $35 per mistake, you might pay pennies in interest or nothing at all. Devin, a college grad juggling 2 jobs, switched his account settings. 1 month later, an overdraft that would have cost him $70 in fees cost him just $1.20 in interest. That single change saved him from hundreds in future penalties. Hidden trap number 2, automatic renewals. Banks and credit card companies sneak in auto-renew products like identity theft protection or payment insurance. Sounds helpful, but often it's overpriced and unnecessary. People pay $9, $12, even $20 a month for something they never use. Over 5 years, that's over $1,000 wasted. Loophole, rewards point arbitrage. This one feels like a cheat code. Some banks let you redeem credit card points for gift cards or travel at a higher rate than for cash. Example, 10,000 points might equal $100 in cash, but $125 in airline credit. That's a 25% bonus for simply knowing where to redeem. Jamal, a frequent traveler, shifted all his redemptions to flights. In 1 year, he stretched his points to cover $1,800 worth of tickets, trips that would have cost him thousands if he'd just taken the cash. Hidden trap number 3, minimum payment illusion. One of the most dangerous tricks banks play is the minimum payment on credit cards. Pay just that, and you'll be in debt for decades. Let's put numbers to it. A $5,000 balance at 20% interest with just minimum payments will take over 20 years to pay off and cost more than $10,000 in interest. This is why banks love when you pay the minimum. It doubles their money. Now here's the bigger picture. Every trap, every loophole, every hidden fee, it all points to the same truth. Banks aren't in the business of helping you. They're in the business of helping themselves. And the only way to beat them is to stop playing blindly and start playing strategically. Because once you see the system for what it really is, you can't unsee it. And that brings us to the final piece. How to take everything we've learned today and turn it into a framework that builds real financial freedom. So after everything we've uncovered, the loopholes, the traps, the myths, what's the big picture? It comes down to this. Banks are not your enemy, but they're not your friend either. They're a business. And in business, the one who understands the rules always wins. Lesson 1. Small shifts equals big wins. Don't underestimate the power of tiny changes. Moving your money from a 0.01% account to a 4% account doesn't feel exciting today. But over 10 years, it's thousands of dollars. The same goes for paying strategically with credit cards or making one phone call to reverse fees. Lesson 2. Always read the fine print. Hidden traps like free checking, overdraft protection, and minimum payments are designed to sound safe. But the fine print tells a different story. Before signing anything, ask yourself, how does the bank make money on this? If you can't answer, don't sign. Lesson 3. Play offense, not defense. Most people live defensively with their money. They react to fees, react to debt, react to emergencies. But the people who win financially, they go on offense. They use bank products intentionally, flip loopholes to their advantage, and always look for ways to make their money work harder than they do. Imagine this. You're no longer paying overdraft fees, you're reversing them. Your savings isn't shrinking, it's growing automatically. Your credit card isn't a trap, it's a free loan that builds rewards. That's not a dream. That's the reality once you decide to stop playing the bank's game blindly and start playing strategically. The most powerful financial shift you can make isn't about earning more. It's about keeping more of what you already have. And the moment you take that mindset, every dollar becomes a tool. Every account becomes a weapon. Every loophole becomes a way to protect your future. If you've made it this far, you already know something most people don't. The system isn't broken. It's working exactly as designed. It's just not designed for you. But the moment you flip the script, the moment you start applying these loopholes and refusing to play blindly, everything changes. It's no longer about banks winning and you losing. It's about you finally taking control. And if these 3 secrets blew your mind, wait until you see what comes next. Because banks aren't the only ones hiding tricks. The wealthy, the millionaires who never worry about bills or fees, use strategies so powerful they can legally grow and protect their money in ways you've never imagined. Subscribe to this channel and watch out for breakdown of how the rich hide their money legally. Because once you learn those secrets, you'll never look at your finances the same way again. This isn't just about saving thousands. It's about building a life where money works for you. So don't stop here. Hit that next video, and let's keep unlocking your financial freedom together.